Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs, the Euro versus US dollar, the dollar versus yen, the sterling versus US dollar. Today's date is November 13th. It's Monday. Happy new week for us. Let's get started. I'm going to focus on the Euro versus US dollar. This is a 4-hour chart to start off. And if we go back in time and take a look at this swing area between 106.74 and 106.94, there are a number of different swing lows and highs going back in time through here, where the market defined this area. Now, we did trade above and below it, as you can see through here, but the market sort of used this area as a level of reflection or deflection to move away from it. Admittedly, in trading last week, when we had ups and downs for most of the trading week after the initial move to the downside, the market traded above and below this 74 to 94 level. In trading here today, you can see we continued that pattern, moving above the 94 level toward the 107 level before rotating back to the downside and moving that down toward the 38.2% retracement. That is of the last move up from this low right here toward the end of October to the high price that we saw in November. So this trend type move come down to the 38.2 and 1.0664 and find some stall in that area. If I were to zoom in just to give you a closer look at that 38.2, you can see in trading last week, yes, we did move below it through here in particular, and over here, and right here, and right here, and but none of the bars could really close below that level or develop any momentum below the 38.2% retracement. And as most people know, I like to see that retracement level be broken and sellers to prove that they can push the price below the 38.2 to show that they can take back more control. But we aren't seeing that. Instead, we saw the price move higher and then try to go back below it again and move higher. And in trading here today, a fairly narrow trading range as the market trades above the 74 and 94, above and below it, but finds support at the 38.2. So what I'm getting at is that the price needs to get below the 38.2 to increase the bearish bias. Have traders looking toward this swing area, looking toward the rising 100 bar moving average on the 4-hour chart. Those would be targets on the downside for the Euro versus US dollar if the momentum should continue in the downward direction. Alternatively, we need to get and stay above the 94 level, although it's been sloppy, admittedly, but I'm still going to be watching that level for clues as far as getting above it and staying above it for a more positive bias in this currency pair. If I were to take just a quick look at the hourly chart here and see what that is telling us, and if I look at this, I'm going to zoom in a little bit here. The price is trying to get below the 200-hour moving average. In trading last week, the price for the most part stayed above that moving average. Yes, we had one break below it here on Friday, but that momentum break to the downside could not be sustained. It was very quick, and then we came back down to it and retested it. So we are trying to, in the early trading hours, try to get below that 200-hour moving average. So sellers are making a play here, folks. Can they keep that momentum going, get below the 38.2? Stay below the 200-hour moving average and keep the bias going to the downside. That's what we'll be looking for today, but be aware. Taking a look at the dollar versus yen, this is the hourly chart, and as you can see in the early hours, the price did move lower in trading here today, but found some support buyers against this trend line, and we are continuing to find support buyers here against that trend line, which also happens to correspond with the high price going back to the end of October right through here at 151.70. So we're trading above the October high and looking still more positive here in the dollar versus yen. It would take a move below the 151.71 to increase the bearish bias in this currency pair. Now we're also moving away from the 150 level, which is now way down here. The fear of the Bank of Japan above the 150 level is dissipating, and we saw that in trading last week with the price moving up. I think every day last week the price moved higher, 1, 2, 3, 4, 5 days to the upside. Now we're working on the 6th day to the upside and moving away from that 150 level. On Monday, the market low, I guess this is Tuesday. 1, 2, 3, 4. Yeah, Tuesday the market low was around the 150 level and continued its march to the upside. So no fear from the Bank of Japan. The buyers are taking more control. So watch the 51.70 level as close as support. If we break below that level, we'll look toward the 151.38 level and then down to 151.23 as sort of numbers of to be aware and prepared for. the 100-hour moving average ultimately would have to be broken, and that's all the way at 151.08, well above the 150 level. So you can see the bullishness that we're seeing here in this currency pair. Now, the other thing to be aware of is that the high price in trading here today, which reached up to 151.85. If I go to the daily chart and look at this high price going back to 2002, this is a multi-decade high, folks, going at 151.93. So we're within 8 or 9 pips from today's high of the multi-decade high, going back to the 90s for the dollar versus yen. So this is a key level for traders, and certainly they'll be paying attention to that. If we break above that level, that's going to be more bullish for the dollar versus yen, so be aware and prepared. So as long as the price can remain above things like the 100-hour moving average and these other levels, this trend line, so on and so forth, upside is still favored for the dollar versus yen. Let's take a look at the sterling versus US dollar, and looking at the hourly chart, you can see where the high prices in trading here today are converging near the or coming up and tested the converged 100 and 200-hour moving averages. That's a blue line going down and the green line going up. Those levels come in at 123.59, it looks like. And our high price came up just short of those levels. So we need to get, if the buyers are to take more control in the sterling versus US dollar, we need to get above those levels. But as you can see, the sellers leaned against that level, currently trading at 45. So successfully defended that level on the first test. As long as the price remains below it, it's more bearish. If we move above it, it's more bullish. That's the name of the game in the sterling versus US dollar in trading here today. The market did base in the early Asian session against this swing area going back in time, and found support buyers between 121.19 and 121.32. It would take a move back below that level, below that area, to increase the bearish bias, and you can see on the move down off of the 100 and 200-hour moving average, price did find support buyers against the high of that swing area. So buyers are trying to take this price higher, but they need to get above the 100 and 200-hour moving average, and we're trading in between support down here, resistance up here, another further support down here at the 19 level on the downside for that currency pair. So there you have it, a look at the 3 major currencies at Kickstart Your Trading Week. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.